Hello, good evening and welcome to Prime Business. I am Pius Kojobaka. The Institute of Freight Forwarders has welcomed the Bank of Ghana's new set of guidelines on the application of exchange rates at the ports, arguing it will address discrepancies in the forex pricing. The Bank of Ghana, in a statement, directed players in the shipping industry that they should, from today, July 22nd, publish daily exchange rates used for invoicing on their website and communicated to customers prior to the issuance of invoices or payment. Reacting to the development, First Vice President of the Ghana Institute of Freight Forwarders Ghana, Nana Isiama Prempeh the said the move will ensure transparency and alignment with regulatory frameworks.
For instance, the shipping lines, they are one of the major operators of the port. There are several shipping lines in Ghana. They all use different exchange rates. Meanwhile, the Bank of Ghana issue exchange rate for the week, which customs and other port operators use for the week. So every week, every Monday, there is a new exchange rate that comes. Sometimes it goes up, sometimes it comes down. Mostly, until recently, it goes up. But to our surprise, the shipping lines don't comply with that. They use their own exchange rate. And that is one of the major issues that we have been raising. And luckily enough, we are happy to hear this thing from the president through the Bank of Ghana.
Great. Now, Ghana's business community is eagerly awaiting the mid-year budget review scheduled for Thursday, July 24. Finance Minister Dr. Kasiel Atuforsen will present the review to Parliament, outlining the government's fiscal performance on the first half of the year and policy directions for the second half. But what are the expectations of the business community, both in the formal and informal sectors? Stefan Mizan Abbas is the president of the Ghana National Chamber of Commerce and Industries.
Unfortunately, that it looks like the government's hand or the economy's hands are tied to the conditions of IMF, for which reason it becomes very difficult. So, in as much as some of this cannot be controlled, in the areas that can be controlled, where there's arbitrary increases in taxes and all of that, that one the government should try and be mindful of that. So that brings me to a point of this 1 cedi levy, which is on petrol. Because if you are putting a levy on petrol, and then you also have to increase utilities every 3 months, then we are overburdening the ordinary Ghanaian.
Right.
So where we can control, I think that we want to support the government control, and where we cannot, we want to manage it as well. So this 1 cedi levy, I think that we spoke against it. Unfortunately, the government has implemented it, but I think that it is not to the benefit of the ordinary Ghanaian, and we are going to suffer. Once that goes up, it means that fuel is going up, and once fuel goes up, every other produce goes up.
The Ghana Chamber of Mines is calling for equitable tax reforms which will ensure that the small-scale mining industry adequately contributes to the country's tax net. Chief Executive of the Chamber, Engineer Ken Ashigbe, explains that large-scale, which is often burdened with taxes, as against the small-scale mining industry, remains one of Ghana's bedrocks for economic stability. Therefore, overburdening it with taxes could derail growth and expansion. He spoke at a press conference to outline the Chamber's contribution to socio-economic development.
To the Chamber, total mineral revenues for 2024 reached $7 billion. Of this amount, $5 billion, representing 70% of total revenue, was retained in the country, underscoring the sector's commitment to contributing to socio-economic development. Speaking at a press conference, Chief Executive of the Chamber, Ken Ashigbe, called for equitable tax reforms to ensure that all players in the mining industry are taxed fairly. He also advocated for a downward review of the Growth and Sustainability Levy to enhance investment by large-scale mining companies.
Government needs the money of all of us. We all need to contribute to that particular one. And again, in a period where we are hearing that the small-scale miners might be, producing as much as the large-scale miners are producing. If the large-scale miners are generating totally 17.7, then maybe what we should do is reduce that GSL a bit and then get that sector to also contribute to that. What can we do to ensure that the $11.4 billion, for example, that is lost to Ghana can come in? If you did that, and then you left a lot of resources, made a lot of resources available to the industry, a lot more investment could go into that.
The Chamber lauded the revision of the fiscal terms of the Ewoya Lithium project. The Chamber's Chief Operating Officer, Ahmed Naktogma, expressed optimism about the ongoing negotiations.
We've been talking, and I know you bear witness that we've talked about it, and now we thank God that a lot of progress is being made, and the government has made an announcement that it is being reviewed. So we hope that maybe before this next parliament rises, there will be a ratification of that lease. But just take into consideration the changes in the price from 3,000 to 600 and all those things. So there has to be, definitely have to be a renegotiation, a review of all the things that were in the first lease so that they can be more competitive.
Engineer Kenneth Ashibe shed more light on the sector's impressive contribution to the country's economy.
Corporate taxes is 10.3 billion, mineral royalties 4.9 billion, employee PAYE was 1.5 billion cedis, dividends was 1.03 billion, and others was 75.3 thousand Ghana cedis as well. And then social investment, the total amount that was spent was $28 million.
The large-scale mining sector contributed a total of 17.6 billion cedis in tax revenue to government, making the mining sector the largest tax contributor in Ghana.
Away from mining, Minister for Trade, Industry and Agribusiness Elizabeth Ofosu-Adjare has called on cement manufacturers to consider some marginal reductions in the price of cement for the public. The minister made the call in an engagement with the Chamber of Cement Manufacturers on pricing and standardization here in Accra. More in this report.
The Minister of Trade, Agribusiness and Industry, Elizabeth Ofosu-Adjare, met the Chamber of Cement Manufacturers on Monday to discuss industry concerns, including standardization and product pricing. According to her, time has come for Ghanaians to enjoy the gains made on the appreciation of the cedi against major trading currencies. She therefore appealed for some reduction across board on all cement products in the local market. The minister disclosed that from the beginning of August, inspectors will be deployed from the Ghana Standards Authority as part of quarterly inspections to enforce standardization of products, adding that failure on the part of companies to meet the required standards will result in a shutdown. The manufacturers assured that if the current positive trends in the economy continue, Ghanaians are going to realize gradual reduction in cement prices.
Fitch Solutions has expressed optimism about the economic outlook of the Ghanaian economy, saying the real growth rate of the country will stay above 5% in 2025 and 2026, respectively. According to the UK-based firm, lower inflation is supporting a positive outlook for the economy. Mike Kuruninga is an associate director of Fitch Solutions and has been speaking at today's Sub-Saharan Africa macroeconomic update.
Ghana's economy recorded a pretty solid rebound in 2024, becoming one of the fastest growing economies in SSA. So as you can see on the chart on the left here, growth remained pretty strong in the first quarter of 2025, coming in above 5%. And this was driven by robust agricultural output, continued expansion in the services sector, primarily in tech and finance, and renewed momentum in gold production. So looking ahead, we remain pretty optimistic on the outlook for the Ghanaian economy. We expect GDP growth to stay around 5% in both 2025 and 2026. So one of the key drivers behind the sustained recovery is the sharp disinflation trend we're seeing.
He also spoke about the outlook of the Ghana cedi.
Ghana is Africa's largest gold producer. The country has seen a major windfall from increased gold exports, which has helped boost foreign exchange reserves, which you can also see on the right here, and has given the central bank, the Bank of Ghana, substantial firepower to actively support the currency on the FX market. So as for the outlook, in the near term, we believe the cedi's gains are likely to hold. The central bank's reserve buffers remain pretty solid. And with gold prices still elevated, there is enough support to keep the cedi broadly stable through the remainder of 2025 and into 2026 as well. However, there are risks, right? So if gold prices were to drop sharply, say due to a sudden easing in geopolitical tensions, Ghana's reserve position would weaken.
This evening, government is taking some drastic measures to help deal with Treasury Auction shortfalls to whip up interest for the upcoming domestic bond issuance. This was contained in its debt and expenditure plan submitted to the International Monetary Fund. George Yafe has more.
Government over the past months has been struggling to raise the targeted amount anytime it goes to the auction market for its treasury bills. Now that has got it thinking in terms of exploring several avenues to address this challenge. One of them is looking at opening up the treasury auction possibly to non-residents to participate. This is because the current laws bar foreigners from participating in government papers under 2 years. Government in the document to the IMF is also looking at ways to whip up interest, possibly in the issuance of the 2-year bond later this year or in 2026. Another thing that Joy Business is picking up is whether to put some pressure on the Bank of Ghana to drop its policy rate from the current 28% by some significant margin, a move that could also help push some interest in government papers and the treasury bills. The Finance Ministry is moving fast on this because the spending needs are expected to pick up strongly from next year and in 2027, as a lot of debts will mature and due for payment.
Meanwhile, Manager of Macroeconomic Research at TCB PLC, Courage Buti, emphasized the urgency, noting that reliance on short-term financing increases refinancing risks and underscored the need to develop the local bond market while carefully managing clauses in the domestic debt exchange.
The CD appreciates and the debt metrics are looking good. We cannot continue to do short-term financing, as in T-bill financing, perpetually. It exposes you to high risk or refinancing risk. It's not sustainable. You can't fund any large project or long-term project with that. And we need to create or recreate opportunities for the local market as well. So it's a good move, but we needed to navigate some of the clauses in the domestic debt exchange as to one, the clear market clause, which I believe we've gone past that. But this next thing is, at what rate are you going to do a bond issuance that will not be detrimental to the rate on the DDE bonds? I think that is a consideration for the market. Remember, those bonds were done something averaging around 9% as coupon rates. Today, if you want to issue a bond, will you be able to do it at 9% or what rate? And the requirement is that clearly you must not do anything that puts the participants in the debt exchange worse or make them worse off. And I think that is one of the impediments. So with where rates are now, we see the market rate, where they are trending now and where they are headed to. It looks like it's getting closer to what the DD rates are. And if it comes anywhere close, then you would have navigated that problem also by issuing new bonds. And if the market is open, the rates are aligned, and then we can begin to come back to market and raise some longer term bonds to fund aspirations, as opposed to staying at the short end. And you'll be doing so also without jeopardizing the fortunes of those holding the old bonds or making the market unattractive for them. Remember, the governor said he wants to bring lending rates down to some 10%, and you look at the dynamics of things, where things are headed now. It looks like market rates are correcting, and if we sustain the fiscal effort, it should correct towards a level that is comfortable. And it is when we get to those levels that issuing a new bond will not make the holders of the DD bonds, if you like, disadvantaged.
Let's now pause for a breather. We'll be right back. Hello again. Welcome back to Prime Business. New Generation Investment Services, managers of the Enidaso Mutual Fund, is confident of a positive economic outlook for 2025. Following the recent ease in economic and inflationary pressures, the investment fund witnessed a positive increase in shares, growing by 13.26% for 2024. Despite recording a reduction in investment in inflows, the company is anticipating a continuous positive trajectory for the year with prudent fiscal measures from the government. Emmanuel Bright-Kweku was at the annual general meeting of the shareholders of the fund and filed this report.
Ghana's economic growth in the last 2 years hit a snag, impacting the financial investment sector. Following a significant economic recovery, the financial sector is bouncing back from the external shock. The Anidasoɔ Mutual Fund, a local investment package of the New Generation Investment Services, is seeing significant gains. Eric Brobe is the vice chair of Anidasoɔ Mutual Fund.
Compared to what happened the previous year, this year the outlook was very bright. We made a lot of gains. Our share value for the year had appreciated for about 13.6%. Now, even now, as we speak, the share value has improved up to 1.4, which is substantial. In the mutual fund, you don't see the outcome straight away. It's sort of creeping. So any little challenge that the economy will face will have an impact on that.
Despite the positive gains, the fund's gross investment income saw a reduction of 17.31%, declining from 553,837 cedis in 2023 to 457,916 cedis in 2024. This decrease was essentially influenced by marginal decreases in interest rates on money market instruments, which reduced asset returns. Fund manager of New Generation Investment Services, Edward Asamoah, says management is adopting strategies to diversify and secure the inflows in alternative instruments.
The yield that we were expecting, or the return we were expecting from it in terms of the coupons was reduced in terms of rate from say 25 to about 10%. So it's impacted the fund investment income negatively, and it's going to continue because it has been structured in such a way that the haircut or the domestic debt exchange, it will take about 5 to 7 years. So it means that those investments in that sector or in that bond, the return will keep reducing till it matures. So if we don't strategize to diversify to other areas, the impact of it will be felt year after year. But the prudent management that the fund manager is embarking on together with the board, now we are diversifying so that the impact on the debt exchange will not be so much affected or felt going forward.
With Ghana's economic growth expected to pick up this year, the fund management are anticipating potential fiscal growth. The investment climate is also projected to improve as debt restructuring stabilizes the economy. Meanwhile, the money market fund of the investment services saw an increase of 17.56%. Kweku Jomokese is the board chair for the fund.
The fund performed well. There were so many challenges, like many of the investment that we made in treasury bills were converted into bonds, which are long-term investment instruments. And for that matter, the government also reduced the rates. The bonds, the bills were attracting about 30%.
For Joy News, my name is Emmanuel Bright Kweku.
Executive Director of the Africa Center for Energy Policy, ESEP Ben Boakye, has called on government to make energy sector stability a key priority in the upcoming media budget review. Speaking to Joy Business on the sidelines of a high-level forum on Ghana's energy sector, Mr. Boakye emphasized the need for urgent and decisive action to address ongoing challenges in the industry.
So the negotiations are ongoing. I'm not sure by next week if there is any wins that we want to touch on. Some of the reforms that are ongoing to make sure.
Sincere apologies to that. We shall rectify that and bring you that story subsequently. Now, the Economic Governance Platform is calling for a sunset clause on the newly introduced energy sector levy in Ghana. Coordinator of the platform, Abdul Karim Moment, emphasized the need for transparency in the implementation and utilization of the levy.
The levy, that's the 1 cedi on the litre that the government has introduced, we realize that there's no sunset clause. We don't have any specific timeline that the government intends to do this. If you look in our history, it has become the easiest, and I must say the laziest way by which government always tries to raise revenue to address energy sector inefficiencies. We've had the experience of President Kufuor's regime where we started paying the toll recovery levy, and we are still paying it till today. Under the previous, John Mahama administration, they introduced the ESLA levy that we have been paying. We thought it was going to be short-lived, but we are still paying it. So now that we are having another levy, we need to have clarity on the timelines. How long is this levy going to be there? So that it does not become a permanent feature when it comes to the price of fuel that we buy in this country. Because you know, when fuel prices increase, it affects a lot of goods and services.
Thank you so much for watching Prime Business. I am Pius Kojo Baka.